Hello everyone, good evening, good afternoon, it feels like evening. Good afternoon and welcome to today's Trading the US Open here with the live trade room. So just to give you a brief introduction, what we look for in a live trading environment is for some high probability trading opportunities that we can look at for the session ahead. So what we look to do is to identify higher probability trading opportunities in relatively normal market conditions, and we have a bit of a process where we look to execute. Let me just get this up on screen. Where we look to execute trades in a very consistent and disciplined manner. Let me just project that across, and with discipline with regards to protecting your capital as well when you trade. So we got into a few trades this morning. During the morning session, we've not, as we've seen for quite a while now, we're not seeing that much follow through with some trading opportunities. So there seems to be very changeable markets right now. Even when they break out and they make new highs, they reverse, and they often subsequently reversing on multiple occasions. So sort of quite difficult environments. We'll go into the charts now very shortly, but then what we look to do is to manage trades effectively. When we get those moves in our favor, we look to mitigate risk, look to take risk off the table pretty quickly. And if you can be in a trade that's risk free, that's the best position to be in when you're trading these financial markets. And one aim is to book in consistent returns. Now, what we've been adept at practicing over recent weeks is the skill of I guess understanding the market conditions and reducing down our exposure to these markets as much as possible. So what we're finding is we're actually taking smaller trade sizes, and we're actually not giving the markets that much of a benefit of the doubt right now. So the pip exposure to the downside is relatively minimal, and we are trading with smaller amounts just because of the market conditions in which we're trading. So without further ado, then, if I could draw your attention to our risk warning currently up on screen. Currently up on screen, if I just fix this just a little bit. You can see obviously there's inherent risks involved in trading these financial markets, so familiarize yourself with our risk warning. Okay, so the next step is for us to conduct a quick review of potential market moving news. Now, it's important for traders to understand the news flow and what is actually happening in these markets. And for this, we can refer to Forex Factory. And I'll slide this across the screen now. And as we look over the course of the day, we've only really got a customer confidence figure impacting the US dollar at 3 p.m. Now, it's expected to be a positive figure. A lot of it is priced in already. So it's whether we get a strong deviation either to the upside or to the downside with regards to the consumer confidence figure. And of course, that has a certain degree of importance for an economy. The more confident consumers are, the more they spend, and the more revenue that's generated off the back of that. More employment, more products and services, and it goes on and on and on. So confidence is a very, very important factor, and it seems to be flying quite high in the US currently. So that's the only major news event that we have to deal with. I suppose there's more geopolitical events occurring, just to name just about a few: trade wars with the US and China, Brexit negotiations, issues with regards to Iran, which is raising its ugly head. The EU, China, Russia look to defy Trump with plan to keep trading with Iran. So the US is wanting to apply sanctions with Iran on Iran because of their the nuclear deal. that was disbanded there a good few months ago. So we're seeing a bit of defiance towards the US a little bit, and I'm sure that could lend itself to additional issues and problems and concerns. So with these sort of more macro events in mind, the Brexit playing a huge issue as far as the euro and the pound is concerned, but just conducting a bit of sort of observation, we were looking for the US dollar to move to the upside above the 112.95, didn't get that opportunity and rolled quite considerably to the downside. The US dollar CAD, which we were looking to buy, has just been sort of making new lows, making new highs, new lows again. So it just remains to be seen what's truly happening with this. And the Aussie dollar clearly is not ready to flush to the downside and to capitalize on this move. So we were looking to sell this market. We did have a stop loss above the 72.55, and as you can see, this market has recently just pulled back and stopped us out on that trade. So just a really sort of painful, slow grinding pullback, literally since the the European Open. So, and it just adds a certain degree of, it muddies the waters quite a lot when you have a strong, when you do your analysis and you conduct and you have a strong bias in a certain direction based on technicals, which is looking to buy these markets. And then you get a session that comes along like we've seen, with a lot of indecision and really struggling to break now below yesterday's low. Then it does obviously put a question in your mind in terms of the true direction of this market. So recently the potential is very much to the downside. We can draw reference to, if I just get up our trading, our Epic pen, we can just share the analysis with you. So we've got this little bit of a channel forming. It's kind of bouncing from highs to lows, and now we're back at this level here. Maybe this might give us a better opportunity. We do have this triple bottom at this level. We were hoping for this market to sort of roll over from here and squeeze lower, but clearly potentially the right analysis, potentially the wrong time. So it does remain to be seen what the next step is for the Aussie dollar. If we get a nice strong sort of selling signal where we're attempting to push higher, this has broken, made a new high, and also made just a very marginal low in here. So there's a structure forming around this area. Let's see if it stacks up. If it stacks up, maybe we can look to get into this market at a slightly higher price, but we will come back to the Aussie dollar in just a second. Again, we were looking for opportunities in the oil market for prices to push higher. We had a very long sideways moving session followed by 5-6 minutes of explosive market, and then we've gone into this sort of reversal pattern again, failing to make new highs, and now we've recently made new lows in this. So really choppy, really difficult trading conditions to manage. And the Euro stocks, we do like the idea of this market bouncing off this level and extending lower. So this is our area for potential opportunities to take this market to the downside. But as you can see, we failed to break the new low, and we've actually reversed and put in a new high. So again, this might move sideways for a period. As long as we don't break the 34.36, it still does represent an opportunity lower. So it could be a case of correct analysis, perhaps wrong timing, or we need to be a little bit more patient with this move. So let's just go through and let's sum up and kind of see where we're at. And the Eurozone is flirting again with the 11800 level. It doesn't really want to leave that level alone as things stand. And there's a bit of a floor being created at the 1727. So right now there's a potential bias to the upside. Again, we've got a lot of resistance around this 118 level, so it kind of needs to prove to us that it's going to actually push higher, as opposed to yesterday's move, which pushed higher for a very, very short period of time during Draghi's testimony and reversed quite considerably. Could this happen again? Absolutely. We're currently trading inside yesterday's highs and lows, so you will see kind of a narrowing of fairly extreme kind of price action, really. But you know, looking at yesterday's low and yesterday's high, we're still kind of trading within that range. So there's kind of a narrowing, effectively. You'll have this narrowing effect. So it just remains to be seen whether we get a break up above the 118 level or below the 1727. So those are the levels to really concentrate on. We're likely to get a lot of further indecision between those two ranges. So do bear that in mind. The pound dollar potentially has the potential to squeeze higher. We obviously, today is quite a strong bullish day. We'll see if there's a commitment from others to actually push this price even higher than these levels. So keep an eye on the 31.67 level. We're currently below that. We'll come back to it in just a second. And again, the dollar yen is kind of bouncing off this level up here. We'd expect to see continuation in the dollar yen to the upside, but 2 days ago we made a new high and had a real strong pullback, and it looks like we're getting kind of similar conditions again. And funny enough, yesterday was a really nice strong push to the upside. So we certainly have to deal with conflicting data and slightly unusual price action. Dollar Swiss just bouncing off these lows, 95.41, and struggling to continue higher since we got the break in the early part of the European session. It's kind of come back off those levels, so the Swiss has strengthened slightly, and we can really see it kind of a narrowing of price action again for the dollar CAD. So we need to see some direction either to the upside or to the downside. There is a potential for this market to actually create a bit of a structure below this level, so firmly within these range. Let's have a look and let's zoom back. So it's definitely a level of resistance, and we do like this market to the downside. The problem is the dollar has been weakening what looks like across the board, and the New Zealand is now strong against the US dollar. So we're not really getting the stars aligning at the moment for us. So maybe a little bit more patience is required in these markets to try to capitalize on some really decent opportunities. Euro pound is threatening to squeeze lower a little bit. With, you know, if we continue to see a little bit of pound strength, we're likely to see this market roll over. But again, we're firmly contained inside yesterday's highs and lows. A slight breakout to the upside. So if we get some continuation to the upside in the pound, we might see opportunities for this market to squeeze higher. That's the pound yen. Euro yen contained within yesterday's highs and lows, threatening to break above the 133.13. We're not too far away, but unless we get that break to the upside, there's still reasons for us to just step back a little bit. Bit of strength coming into the gold market, but as you can see, we're effectively moving sideways, and that's really all we need to concern ourselves with at the moment. Let me just convert this. So what we can see is this little bit of price action kicking in here, supporting prices to the upside. So it may be the case that we just subsequently get a little bit of a breakout to the downside, that this market is almost refusing to push any higher right now. We are at quite significant highs on even on a daily time frame. We're up at these levels, potentially a lot of resistance around these levels in here. So getting this market extend lower. Now a structural failure again, potentially to the downside. So it will be quite interesting to see how price interacts with roughly this blue ascending level, just kicking in around these areas, so we can keep an eye on the oil markets. The S&P, lazy strength seems to be creeping in. We're just sort of grinding higher, but quite painfully so. Not much really going on with the US 100. We might see, obviously, those markets come alive again at 2:30 UK time, which is the open of the US stock markets. Looking at the FTSE 100, we like the idea of this market to weaken. What we're seeing today is a considerable amount of strength, and we're also seeing pound strength as well today. So whether we look at the pound yen, the euro pound is negligible, but the pound dollar is on the strong side. So when we look at the FTSE, we've now got a situation where the FTSE and the pound have been strengthening at the same time. Normally there's been this negative correlation between a negative pound or a falling pound and a rising FTSE, and vice versa. So when the pound increases, the FTSE falls off. But today, obviously, we're getting one of those situations where the FTSE is increasing in value, and so too is the pound. So we'll see how this correlation unhinges as the day unfolds. Sorry, that's the UK 100. So and just the final market, the euro stocks. We're getting obviously a comprehensive retracement of yesterday's selling candlestick. Again, from a support and resistance perspective, it provides us with the perfect opportunities to look for opportunities to sell this market, and we've got potentially a similar situation occurring right here. Obviously, if we start to break above this level in here, the 34, 36, it might give us some opportunities to buy this market instead. So we can look at these markets from both angles and from both sides. Okay, so we're left with effectively the potential for looking for a bit of pound strength, really. And that makes us nervous, just with all of the rhetoric surrounding the US dollar at the moment. And so we're getting this Aussie dollar just attempting to break back above. We're already above the 72.50 level, so this may be a market to back off from. So instead of the euro dollar, what we're going to look at is the pound dollar. Just see if we start getting some strength creeping into this market over the near term. So let me make this change. Obviously the pound trade, or the idea behind the pound trade, would be trading pound strength. So this is a really important level there for the pound, the 31.67. We have the dollar currently selling off against the Aussie. Dollar CAD not really showing any directional support for us. The US oil was just coming back off its lows. So grinding lower, sideways moving, explosive move, grinding lower, explosive move, grinding lower. So that seems to be the oil markets at the moment. Explosive move, little rollover, eventually an explosive move and a rollover. So that's obviously what we need to be prepared to do, but we don't really want this market breaking certainly below the 72.32 level, and we're not too far away from that as we speak. And now the Aussie dollar is just taking off to the upside, and we're retracing quite heavily to the upside. Whoops, excuse me. I'll put that level back in. So that's why we're looking to sell this market, is to see if we could capitalize on a little move from this area to the downside, but clearly now is not the correct time for this market. So we'll have to bide our time and just kind of wait and see on this. That's the Aussie dollar. Because here what we have is potentially a structural failure to the upside, but actually more of a kind of a double top as things stand. We've had one break above or a close below the 31.67, and we've had already a fairly quick and swift rejection of that level on a 15-minute time frame. So dollar yen. It looks like we're going to get a bit of a strong rejection off this level. So what we'll put into that place is just so this is the dollar CAD, and these levels in here signify intraday levels of support and resistance, and you can see that there's a sort of an average price really between 29.62 and the 29.55 level, and we're just in this process of moving sideways. So we'd like to see a little bit of dollar strength start to creep in. So I've just posted a little note there into your chat box, so feel free to post any comments as and when. If there's anything I've covered or you don't quite understand, please do let me know. You know, perhaps there's markets that you guys are looking at that we can't identify. If there is, do let us know. We do look through sort of 16, 17, 18 of the most liquid markets in the world, and I suppose really good opportunities are few and far between. Okay, so we're getting a bit of a blowout around these sorts of higher levels. Let's see what that level corresponds with. It's just this higher peak up in here. So let's go into the 5 minute. Okay, so on a daily time frame, we've just literally pulling back off the highs. Nothing significant has changed just yet regarding the Aussie dollar. Dollar CAD just moving sideways. Pound dollar just rolling off its highs. Let's have a quick look at the FTSE market, because I'm just looking at the Euro stocks, the FTSE. So looking at the FTSE market, it's just looking like it's extending. It's going to push higher. The Euro stocks is not really doing an awful lot, so not a great market today. US equities showing signs of a bit of bullish price action, but they've not really done an awful lot, certainly during the European Open and the US Open so far. US oil definitely playing around at these levels, so I don't know if we get an extension lower or not. I mean, we would be looking to see if we could buy the US oil market, but it would have to be above the 72.52 level. And let's look at it on a bigger. So when we missed this explosive move very quickly on the crude oil market, which we were looking to trade, by the way, we were just marginally distracted with another market. As you can see, over a minute or two, we literally moved from these prices and it just broke to the upside. So we've seen this little rollover back to the downside, back in line, respecting this level of support once more, and it might give us an opportunity to buy the oil markets at this more interesting price of 72.52 with a really strong, fairly easy to identify stop loss just below the 72.37. Okay, global equities showing signs of strength, but not much strength. FTSE is potentially breaking above the 7,500 level to the upside and would be an interesting trade. Okay. See, this is one of the few markets that has the potential to squeeze higher, but the price action is horrible. I don't know what you guys think. We are back to the 70.52 level. We're just a little bit above this. Hiya, Skillet or Elvis. So apologies, I'm not sure which is your first name, but you're very welcome to join us. What about the euro pound? Yeah, the euro pound. The problem we've had with the euro pound is that it's been very much open to politicians speaking to the markets, and the markets have reacted quite aggressively. We've had a lot of indecision around these lower prices, and then on Friday it was expected that the Brexit negotiations would end with a hard Brexit or a no deal, and that really, well, the pound sold off, but the euro strengthened, so we saw a really strong explosive day. And actually, from a price action perspective, now we are dealing with the consequences of that move. So yesterday we had a bit of selling coming in, which is not overly unusual, but today now we're contained very comfortably within this range. And if we look at it on a 15-minute time frame, and just zoom out a little bit, we can kind of see that there's this sort of support level kicking in, and we have this sort of descending triangle, which is just putting a bit of downward pressure on this market. But that's obviously the more recent price action. This is on a 15-minute time frame. So if I just zoom out a little bit with this market and just take that off there, you know, we had been extending steadily lower for quite some time, and then we just get a really strong explosive bit of price action. And you know, what we're kind of seeing is this bit of a funnel. So a breakout either to the upside or to the downside, breakout below the 89.35 is kind of the high probability aspect to this trade. Whereas certainly the safer option is probably just above the 89.95 level. We could probably look at the same trade from just a slightly lower price. So because we're in this range bound situation at the moment, Skelet, we would err on the side of caution really, just for now. Now if we got a break below, sorry, let me zoom in a little bit more for you there. If we got a break below the 89.35, then that would be your high probability trade to the downside. Do you mind me asking, Skelet, are you trading it yourself? Perhaps you're in that trade already, and what is your directional bias? Are you interested in buying it or selling it? Obviously we don't have massive information to work with on today's price action really, but Lewis, good afternoon, Lewis again. So if the GBP, I assume, is strong and Swiss is weak, do you think this is also a good market to get into? Yeah, the pound Swiss. Let's have a quick look. Yeah, my pleasure, Skelet. It's just a little bit, and in fact, you can even see it on a daily time frame. We're just kind of in this funneling price action. In terms of the market conditions, unfortunately, we've been in what's called a consolidated market now for quite some time, ranging between these highs and these lows. You know, we've had a couple of little breaks to the downside and a break to the upside. Recently, we didn't get the follow through; we got the rejection. So we're continuing in this vein. So probably logic would apply that maybe we'll get a bit of pound strength creeping in, but it's only if we get a break above these highs would we be potentially interested in getting involved to the upside. Just because we think it's more likely to become a little bit more range bound for a little bit longer. And of course we've got these issues and concerns with the politicians and the actual negotiations themselves. So yes, you trade yourself. Okay, interesting. You were just curious about it because of the Brexit. Yeah, and really that is ultimately the reason why we have this sideways moving market, is because this is all Brexit negotiations. And it's just very likely to continue, certainly until we've got constructive views either way. Now, even when we got this little break down here and that little break to the upside, we still weren't interested in trading it. because would we commit large amounts of capital to this market moving higher or moving lower at this point? No, we wouldn't. So we really, just from a fundamental or a logic perspective, really, we wouldn't be looking to buy that breakout where ordinarily we kind of would be. So that's the difference. It's just the market we're trading. It's kind of a nuance, and what we're likely to see though, and it's worth sort of zooming out for, is to have an understanding of this market just on bigger time frames. We're coming from a much lower base. We've had obviously times where there's been selling and buying coming in, but more recently there is this upward pressure in the euro pound. This little bit of movement up here, and we've got a lot of consolidation creeping in literally over the last 12-13 months in this little zone in here. However, if I just zoom out a little bit more, just so you can hopefully see this bit of price action, and it's worth keeping an eye out for as well, guys. So if we get a soft Brexit, we're likely to see the pound strengthen probably quite considerably, and it might give us some great opportunities to actually trade this little breakout range. But if there's a no deal or if there's a hard Brexit, we're very, very likely to see the euro pound move in that direction, and the pound move accordingly, the pound dollar, all the pound markets. So we're likely to see a lot of these markets just devaluing once more. So this was the significant devaluation there over the last few years. This little impulse here, which was again fantastic trading opportunities to sell this market on multiple occasions. We made a low of 119, 118, somewhere around these lows. We've been in this little bullish trend to date, but we've the dollar has strengthened somewhat, so it's pushed this price a bit lower. We all know that Trump himself is not overly interested in the US dollar. He would certainly like it devalued, and the dollar is obviously quite strong at the moment. But if we experience a no deal, we're likely to see at least these prices touch these levels, probably even lower than that. So although we're dealing with these really tight trading conditions now, over the coming weeks, it could give us some really exciting opportunities with regards to the pound. So unfortunately, a little bit of patience is probably required for the time being. We do kind of have quite choppy markets as things stand. So so we're left with a little bit of a mixed picture across the board now. So we're getting this little failure. So I think we might look to get into this market to the downside if we got a close below the 72.55. It's just too choppy, isn't it? Just a pullback on a 5-minute chart. It would be a structural failure below that 72.55. So that would be interesting, but that's really all this market has going for it for the time being, and we are very likely for this market to actually move down to these levels again. That's the irony behind this bit of price action. See, we've got a triple bottom, we've got kind of a double top up here, and that's the top end of the W, the middle part of the W. And are we going to continue rolling over? The only thing this would have going for itself is a very, very small stop loss. So if we get a close beneath this level, we're going to see if we can sell the Aussie dollar from a much higher price than what we were into it earlier. Afternoon, Connor. Hope you're doing well. We had another sort of choppy, sort of directionless morning, Connor. I don't know if you took any trades this morning, did you? So the lack of direction continues, unfortunately. So the only thing we have going for us really, and we're not actually even getting the close beneath this level, which is the 75 level, we could have a 6 or 7 pip stop loss, which means the stop loss is actually getting even smaller. So doesn't seem to be much signs of strength coming in to the dollar just yet. Just makes it a very, very difficult trade. Normally we have our trade plan up on screen, but not really seeing any really strong moves in any of these markets. Yeah, so it hasn't been great. No, you were in nothing this morning. It was already in the Aussie dollar on a larger time frame from Monday. Is that to the downside, Connor? Were you looking for the Aussie to sell off a little bit from Monday? So yeah, so yesterday looking for this market to sell off this level of resistance. Were you looking for the same trade? You were. It's from a consistency perspective, it is the high probability trade, but obviously the market can do whatever it wants to do, and it may be the right trade but the wrong idea. Yeah, good. Okay. Yeah. So I mean, good spot. I mean, it's something we've been talking about for a couple of days. These bullish candlesticks are effectively they're counter trend moves. So we do like the strong. Okay, I think I've just accidentally put in. I think I've obviously clicked that button and just dragged it ever so briefly. So I definitely don't want a take profit on this trade. So let's cancel that take profit on the screen. So I did that by accident. I know it's very painful, isn't it, Connor? That we're just getting plenty of practice at managing risk. And what's interesting as well with all of the trades, that even if we doubled or tripled our stop loss, it's still not making much of an impact. You know, these are strong pullbacks off, major levels, and they just continue to pull back until they make new lows, and then they start reversing again. So just extra tricky. We can see the fact that we're making lower lows and then we make a higher high, and who knows really at this point which direction this market is moving in. For now, it's just moving sideways. And look at the sort of the volatility of this market just go fairly nicely and consistently up and down. So it looks like the next step is for the bit more volatility to start coming out of this market. Oh, apologies. This is a 15-minute time frame. Sorry, I thought it was a bigger time frame. Let's look at the volatility on a daily basis. I mean, it goes from ups and downs and peaks and troughs, and we're probably edging a little bit lower. We're certainly nowhere at these highs, which is an extra sort of 50% increase really on these current ATR levels. So it just shows you it calculates the range over the last 20 periods from highs to lows. And if we look at the last 20 days in the euro dollar, it's the average is 81 pips in that range. So that kind of speaks its own stories. And we've had a couple of sort of big, strong moves to the upside and to the downside in this market as well. So it's definitely keeping us busy, that's for sure, right now. They're not making life too easy for us. So we have this low now, the 72.54, and it would constitute a fairly significant kind of double. We are only looking at this on a daily time frame, of course, so let's have a look at it on a 5-minute. Currently just experiencing a bit of a pullback. The only thing we'd have in this is a very small 7, maybe 8 pip stop loss in this market. I do apologize, guys. There's not a vast amount to really work with. Some pound strength, but of course we've seen what the pound can do. It can roll over, and price has been at this level for quite some time now in the pound and the euro yen. Gold, slight bullish angle to it today, but generally moving sideways. And now we're getting a little bit of a push to the upside in the oil market. So this is the other market we were looking to get into. Still got a bit of work to do. Like previously, we've had just a very, very brief flush to the upside, and then spent the rest of the morning just pulling back. And now it looks like we're getting a little bit of movement to the upside, but we've got a number of levels for this market to clear now to the upside. So let's see if it does, and it's looking like it's going to do that. Just making it extra difficult. Well said again, Connor. We should we should reward you for these reminders. You're absolutely right. It's quite engrossing, obviously, with looking at these charts. It's a fascinating environment. Very tough, but fascinating. So you are absolutely right, guys. We will. We will continue to have a look at these trades over at the live trade room. So we will be switching across, guys, because we do have traders over at the live trade room now. Might be an opportunity to sell the Aussie dollar again with a really small stop loss in that market, and we'll be looking at the oil market and see if we can get a move to the upside or not. The FTSE, oh sorry, this is the so we'll have a look at the Euro stocks. I mean, it's just not really doing much and just meandering a little bit, the Euro stock market. So no clear direction. So what we're going to do is, guys, we're going to switch across to the live trade room now. So for those of you that are not members of the live trade room but potentially would like to be, please do read the information below. We're currently offering a 14-day free trial, no obligation free trial for you to join us for 14 days. We do offer our traders up to 76 live trade rooms per month. So we do hope that would represent fantastic value. And if you do want to join us on a permanent basis, it's just $9.99 per calendar month. So hopefully you do find that incredible value. And all the details are below. So do feel free to join us over at the live trade room. You can get instant access just by clicking on the link and following the steps. So very easy, very straightforward. So that's just about it. We're going to switch across now. We will look at, again, a bit more carefully at the Aussie dollar, and we'll see what's going on with this oil market, because it's acting a bit strange. And we do have the consumer confidence figures out at 3 o'clock impacting the US dollar. So we'll have a look at all of those things over at the live trade room. So thank you very much for joining us. Sorry we couldn't get into any trades over the last hour. As you can see, there's limited sort of high probability opportunities. Yes, there is trades, but from a high probability perspective, it's lacking. It doesn't quite conform to the types of trades that we ordinarily look for. And we took a few speculative trades this morning, and they just, with very small risk associated with those trades, they just started behaving really poorly, and we're still sort of sideways moving effectively as a result of them. So those are the market conditions which we have to accept when we trade these financial markets. So on that note, guys, thank you very much for joining us. We're switching over to the live trade room now. Please do subscribe to the channel and give us a thumbs up if you can. And of course, we can connect with us through our Facebook, Instagram, Twitter and LinkedIn. The details are there on screen. So thank you very much for joining us. We look forward to seeing you next time. So from everyone here at the Live Trade Room, take care, and we'll speak to you soon. Bye for now.